This will be the simplest DSCR loan explanation on the internet. I'm going to keep it brief. I'm going to break it down simply and then cover some really unique strategies at the end on how you can leverage this loan program to get ahead, retire early, and buy properties in such a simple way that a lot of people are overthinking right now in this market. So let's talk about what a DSCR loan is. It's a loan made for real estate investors only, and the approval of the loan is based only on rental income, not your personal income. So DSCR just stands for debt service coverage ratio. It's a fancy term for rent covers the loan. So why regular loans don't work when you try like a conventional loan is that lenders want W-2s, tax returns, and a ton of paperwork. It's just normal because we're heavily regulated, right? I'm a lender, so I'm going to ask for a lot of documents when we're doing these traditional loans, okay? The next thing is that the more properties you own, the worse your debt to income ratio looks. The DSCR loan doesn't look at your debts, okay? So it does not calculate how many car payments you have, how many mortgages you have, credit card debt, right? They don't really care. They're just looking at the rental income from the property. And a lot of cash flowing investors get denied, and I see this all the time, because they're not showing any income on paper, right? So that's why regular loans require you to show income on paper, pay your taxes, right? Sometimes pay a lot of taxes just to get qualified. When DSCR loans skip all of that, okay? So let's look at a real example, just best way I can explain it. So you have, let's say, a $205,000 purchase price, right? So my guy comes to me, he's like, all right, I want to fix up this property and I want to buy and hold, okay? So he's going to rehab the property. Budget was around $50,000. The after repair value is now $375,000, okay? And he wants to take cash out and buy the next deal. At this point, the best way right now, the best strategy is using a DSCR loan because you don't need to verify anything, right? You just take cash out of the property, just need to look at rental income, pay off the hard money lender if you used a hard money loan to buy the fixer upper, and then now you can have a property that may or may not cash flow, but at least now you have the cash to go buy the next deal. So here's a DSCR calculator that's simply going to tell you if your loan is going to qualify or not. If you want a copy of this, you can just comment below, or I believe I'm going to have some links you can click on to get a copy of this. Okay, so remember, $375,000 is our new appraised value of the property. Our proposed loan amount is going to be $300,000. So you can go up to 80% of the value of the property, cash out, up to 4 units, by the way. So up to a 4-unit multifamily property. Let's say the interest rate is 6.9, which is really good for DSCR. And we're doing a 30-year fixed mortgage. Now you can do ARMs, you can do 40-year fixed, but most people just opt in for 30, okay? Let's say the gross rental income is $2,650, okay? And then we have our taxes of $400, our insurance of $160, we have our total subject property expenses and our monthly mortgage payment. All in, we're at 103%. That's good. You want it what's called 1-to-1 ratio. You want it no less than 100% for a DSC ratio, okay? So in this case, since it's 103, it works. Now, if the rental income was $2,450, we're under that, then the loan might not qualify. However, there are programs where if the ratios don't align, we can still fund the deal. There's some workarounds. There's a lot of plan B, plan C options, but just know that in general, you want the rental income to cover the mortgage payment, okay? So what I love about DSCR loans is that they use the gross rental income. They do not use the net rental income. When you're normally buying with regular conventional loans, depending on how it's structured, normally they look at 75% of the rental income. They don't look at gross. So that's what's really great about DSCR. Now let's quickly go back to the slides. So now that you looked at an actual deal example, I want to highlight why they work better and some details on the loan that's really important for you to know. So DSCR loans require 20% down when you're buying property, okay? Even if the property is vacant, you can still use a DSCR loan, all right? So lenders look at the property's rental income instead of your personal income. So even if it's vacant, they can have an appraiser come out. That appraiser will assess the rental income of that house as is, as it stands currently, if you are purchasing, okay? And you can close in an LLC. It's very powerful as regular loans don't allow that, all right? The rate and term to expect is the rates can be anywhere from 6.75% to 7.75%, sometimes even 8%. It really depends on your credit and like the deal that you're buying, how much you're putting down, all that stuff. There's multiple facets that go into the rates and the terms of a DSCR loan, but you can do, like I mentioned earlier, 30-year fixed and all those sort of options, all right? So there are prepayment penalties for DSCR loans. That's really important. Some states have different rules on this. So if you have any questions, just reach out to me because I know people are watching this from all over the US. So if you're selling or refinancing too early, it can trigger a fee. The way prepayment penalties work is you can choose between a 1 to all the way to a 5-year prepayment penalty. So prepayment penalties max are up to 5 years. And the way it works is you pay 5%, then 4%, then 3%. So if you got a 5-year prepayment penalty, if you pay off the loan year 1, the fee is 5%, then 4%, then 3% the next year, 2% the next year, 1%. Does that make sense? So it steps down every single month, right? So it goes from 5% to 4%, the amount of the payment of the penalty that you have to pay. So normally, a lot of investors right now, I'm just telling you at a high level, they'll take the 5-year prepayment penalty because most of these guys aren't going to pay off a $200,000, $400,000, $600,000 loan in the next 5 years, right? If you are going to pay it off quickly, then yeah, we can do a 1-year prepayment penalty or a no prepayment penalty. Just know that the higher your prepayment penalty, the lower your rate. Okay. Again, they're opposites. The higher the rate, the lower the prepayment penalty. All right. So moving on, remember that rental income is verified one of two ways. Either we look at what the appraiser assesses the market rent is, if it's vacant, right? Or we can use your lease agreements. If the tenant pays cash, then the appraiser's rent assessment can still be used. And rental income is always the backbone of every DSCR loan approval. I would say rental income and credit, okay? For first-time investors, I get this question a lot. First-time investors can qualify. It's stronger if you do have a cosigner who already owns real estate. Lenders want to see that the numbers work even if you are new. And owning your own primary is preferred. But there are some programs that let you purchase even though you do not own a primary residence. If you have questions on that, reach out to me and I'll put my info in the description. You can own the property in your business. You can close an LLC or S Corp, right? It helps with taxes and asset protection, and it keeps your business deals separate from your personal life, as well as bank accounts and managing your money. So remember, you could buy or refinance with a DSCR loan. You could buy rentals that cover their own mortgage, refinance to pull cash out from flips or rentals, and it's the best way right now to grow your portfolio quicker without having to rely on traditional loans, all right? And you can do short-term rentals. So you can do Airbnbs, VRBOs, and vacation rentals. That is massive, guys. I think you can go up to like 2 or 3 million on the loan amount, but they do allow short-term rentals. So if you have, again, questions on that, reach out to me. So there's a lot of programs, and I'll finish with this, under the DSCR umbrella, right? You can do fixed loans, interest only. One size doesn't fit all. Every investor is different. So that's where we come in because we have access to over 200 lenders that find the best program and rate for you, okay? I'll tell you guys right now, most lenders don't do DSCR loans or barely do them, okay? They don't do them well, and I do them a lot. That makes up majority, I would say actually half of my business right now. Most lenders are trained to just do traditional mortgages, right? They don't understand how to think outside the box and work with these creative loans, right? But that is a good chunk of my portfolio that my team is doing right now. We'll shop a lot of different lenders to match or find the program that best fits your situation, and we'll save you that time, money, and stress. So you don't have to look around and kind of see like what we'll give you out the jump the best deal. So overall, there's a lot of programs. One size doesn't fit all. You can spend hours researching or just book a call with us and we'll get straight to the point and we'll give you the best options. I'm very transparent, right? I want to make sure that you know what you're getting into. So if you want to see what you want to qualify for, or if you want to buy or refinance using this loan program, if you have a flip coming, whatever the case might be, reach out to my team and I hope this video helped. Thank you.